Hi everyone, welcome to today's video. So roughly 26,000 crores of money comes into India's market in the form of SIP every month. Now this is having numerous implications, and if you don't understand this simple point, it's going to create havoc on your portfolio. So please listen to this section very carefully and let me indicate it on the chart, right? So for example, if you consider this candlestick chart is this, right? So this is India's Nifty 50. Now I'm comparing this to QQQM, right? So this is NASDAQ composite, right? So this is the NASDAQ index or the US market index. Now here what you would notice is that India market does not fall much, okay? It fell here, this was 2022, but the drawdown on the US market was much more significant, okay? So this was much more significant. And then since then it has gone up, it has come down, it has gone up, it has come down, it has gone up, it has come down. But what you would notice is that India's market is not falling much, right? There have been periods of drawdown. For example, this is a period of drawdown, this is a period of drawdown, this is a period of drawdown. There are drawdowns, but not like collapses that are coming. So as a result, what people have started to say is that, you know what, India's market is now completely domestically driven because our fund managers buy it, all the SIPs that you're doing, it's going into buying stocks. So since no one is selling much, the markets are not going to fall. Okay, great news. This is part one. Part two, what you would have witnessed is that if you study this phase of the market, right, when the market corrected by roughly 15% here, right, there was massive panic in the Indian market. And you yourself would have noticed on your portfolio that if you were not invested in the right sectors, for example, finance, right? So finance did not fall much in the last fall. And for example, I have been saying for a while that almost 70-80% of my portfolio is pure finance, okay? Indian banks and all that stuff. All these have started to run up, okay? So I was saved. I did not panic during this time. Why? Because I was in the right sector. So what is happening, like fundamentally, long story short here is very simple, that see, in India's market, this Nifty 50 is being aggressively rotated. Sometimes you will see that tech stocks completely go out of favor. They fall quite a lot. Then banks go completely out of favor. For example, HDFC Bank got stuck for like 3 years. And if you get stuck in bad stocks, then for years you will not make any returns. Same happens with IPOs. For example, if you consider LIC IPO, etc., then again, you would have gotten stuck in those type of IPOs for 4 years and your money would not have been recovered. So therefore, on this video, what I'm going to do is that I'm going to give you my notes, how I'm rotating my capital on the India's market right now, why there are certain sectors that I'm slightly more bullish about, how I'm thinking about certain stocks where I find more value. So I'll just give you a framework to think about these things, right? So these are just rough notes. This is not something that I'm pushing you to invest, not invest, your call, whatever you want to do. I'm just simply sharing my research and my understanding on this topic. Feedback is more than welcome, right? I mean, it's always good to learn new things from everyone, but this is what I think about different things, and I'll use very concrete stock specific examples. Also folks, before we move on to the main video, I just wanted to touch upon the subject that I'm heavily invested in AI stocks in the US. And not only do I believe in the AI portfolio building theory, I also believe in the AI career related theory, that if you are looking to improve your career, learn AI related skills. So I would highly encourage you to attend a 2-day AI training program, which is valued at rupees 10,000, but it is completely free for all my viewers. Thanks to our incredible partners for today, which is Outskill. This is not just any training, it is the world's first AI-focused educational platform, which are backed by top investors and pioneers. This program spans for 16 hours and would last from 11 a.m. to 7 p.m. over the weekend. This training is highly valued and we are going to give you for free. Link is in the description. Here is what you will learn: 20 plus AI tools to add to your toolkit, prompt engineering tools, data analysis, creating professional presentation using AI and Excel, building tools and applications with AI where no coding is required, AI generated images, videos that will blow your mind, developing powerful AI agents, and automating tasks for maximum efficiency. This program is for everyone, irrespective of your background, be it from sales, finance, marketing, HR, or even running your own business. Professionals from 120 countries have already joined and loved this program. Spots are filling out fast, so do check out the links in the description comment box. And also be sure to join the WhatsApp community. And also remember that there is an introduction call this Friday at 7 p.m. IST. With that said, let's move over to the main video. Okay, so the first asset that I would like to discuss a little bit about is Bajaj Finance. Okay, so Bajaj Finance is on my portfolio. In fact, I have started to cut my positions and I have cut some positions already, but the stock continues to run, right? So what has happened on Bajaj Finance? So if you actually study Bajaj Finance from a technical perspective, see, since 2020 to almost 2025, it was consolidating in this range, right? And since then, it has given a breakout. So how much breakout has it given? So this total run up is roughly 20%. So it's not as if that Bajaj Finance is hyper overvalued. Am I cutting positions on Bajaj Finance? Yes, because I was not the one who was buying at these points. Okay, so I never really bought Bajaj Finance at these points. I collected, right? I mean, I collected for a fairly long period of time, and this is the run up that I'm enjoying now. Okay, so this run up is what I've enjoyed now. Approximately it's like 40-45%. Again, if you study something like HDFC Bank, Kotak Bank today gave like very good run up. All these stocks have started to run up a little bit, right? So these stocks have done well, right? So therefore, because they have run up very aggressively in the short while, so what is happening are two things. One is that if you study this phase, from an absolute short-term perspective, something like Bajaj Finance looks a little bit bloated. Okay, so if I have 100 units of money on Bajaj Finance right now, what I'm doing is that I'm booking 20% profits, right? So I've booked like 20-30% profits I'll book here, and I am out. The rest of the positions I will carry. Why? Because on a long frame, it does not look hyper overvalued, right? So this is like the first key point that I want to drive home. Then comes again the same questions. A lot of people ask me that, hey, what about Jio Finance, right? Because again, Jio Finance, I had been advocating for the stock that Jio Finance is a monopoly stock. Now people are getting very excited about Jio Finance, right? Now let's quickly look. So for example, if you consider Jio Finance from the bottom, right? So this has actually given roughly 48% run up. And if you study this on a slightly long frame, what you will realize is that this is the resistance point, right? I mean, this is the resistance point that it is hitting. So therefore, booking some basic profit on Bajaj Finance like 20-30% kind of makes sense. So at this stage, now 2 points, right? So one point is that, see, if SIP money continues to come in the tune of 26,000 crores, it will go by default to companies like Bajaj Finance, your Jio Finance, all these companies. Does it make the current valuation extremely cheap for these companies? No. Okay. Does it mean that you cut all your positions on something like Jio Finance or Bajaj Finance? Again, the answer is no. Why? Because what are the reinvestment opportunities? There are very few discounted opportunities in the market. Now, why is that the case? So for this, you need to study the valuations, and I'll be quick. I'll not take a lot of your time. So see, if you study the valuations of Nifty 50, if you study the valuation of mid cap 150, if you study the valuation of small cap 250, right? So all these things, right? So here, there is very clear overvaluation still on these two indices. Okay, these are slightly overvalued, right? You can study valuations from multiple angles. For example, discounted cash flow model is one way of studying valuations. Another would be the stock growth CAGR versus the profit growth CAGR mismatch. The another aspect would be earnings growth rate forecast. That kind of gets featured into DCF, but there are multiple ways you can study valuations. But long story short, at least my models tell me that, hey, at least on these two bets, the market is still frothy. Okay, Nifty 50, you can say that it is somewhere like fairly to slightly overvalued zone. But long story short, what the story for the first two stocks that I'm telling you is, let's see, Bajaj Finance, Jio Finance. What type of companies are these? Well, these are loan giving companies. These are some of the fastest growing segments in the Indian economy. That loan uptake rate is huge in India, especially with the recent RBI rate cut. What has happened is that there will be more liquidity with banks. They will lend out more, and eventually NBFCs are going to benefit. So one could argue that companies like Jio Finance, Bajaj Finance will benefit. And Jio Finance is a different beast altogether. So we'll make like a separate video or something, and then we'll discuss more. But long story short, these are not the stocks where you sell entirely and go away. Okay. So what I am typically doing, and these were like, I mean, I had been aggregating these stocks. If you watch some of my old videos, or if you're a YouTube community member, you would know all these things. So long story short, booking profits, is it critical? Yes. Is cutting out the entire position, is that something that you should do? Absolutely not. Why? The reason is that, see, there are not enough reinvestable opportunities. That's the point. There are not enough reinvestable opportunities in undervalued segments in the Indian markets right now. Having said this, now what's the mitigation strategy? Because you might only book like 20% profit, and then suddenly if there's a market crash and the entire market crashes. Now, if market crashes, then Bajaj Finance will also fall down. Jio Finance will also fall down. Then you'll say, yeah, you know what? I was sitting on such good profits. I should have booked some profits. So what is it that you should do? Well, very simple strategy for retail investors is that, see, maintain something called as cash reserves. Now, cash reserves means that, for example, if you have, let's say, a total investment of 100 units in the market, this could be, let's say, 10 lakhs. Okay. So this is the 100 units of money that you have invested in the market. So what your goal should be that, see, keep 3 lakhs on the side. So this is what I'm doing right now, that India market, I'm doing like 70-30. US market, I'm 80-20, right? So US market, I have bought a lot of good things. You can see my portfolio here. In case you want to learn more about US stock investing, please join this community. It's really useful. So you can definitely check it out. You'll be able to see my buy sell positions on different stocks, see my entire portfolio, how I'm designing it, how I'm planning to beat the benchmark. You'll also attend live classes. So a lot of quality information is given. So in case you are keen, definitely do consider it. But see, having this 70-30 cash hedge on India's market is very simple and very important. Why? Because the market is operating with the viewpoint of what? So again, let's go back to that Nifty 50 chart. See, this is the long frame of Nifty 50. If you study Nifty 50 from 2020 onwards, it has pretty much followed this channel. Okay. There are times when it goes overvalued. This is definitely an overvalued zone. This is slightly overvalued. Now, what's likely to happen next? Well, this too might go overvalued, right? So it might go somewhere like this. And how much are the expected return? And this is something that I've said earlier also, right? So this is like maybe 14-15% is the maximum run up that we see from this point. And at that point, markets will definitely be overvalued. Okay. So people are right now panicking that, you know what, our market's overvalued, undervalued. See, no one can say that for sure. We can approximate the range. Right now, the range on India's market is that it is towards slightly overvalued with the potential to go extremely overvalued in the next few months. Okay. So the assessment is, especially after like RBI's liquidity announcement that they are cutting interest rate, all that stuff. So the expectation is that, see, at least this point or this segment is likely to get hit. So if you want to do a swing trade, this can definitely be done, right? But always take these positions with a pinch of salt, right? In the sense that, for example, always have some kind of insurance. So maintaining that 20-30% cash reserve is very, very critical. Now, why? Because the markets generally are not undervalued, right? When markets go undervalued, then you go like 100% invested, no cash positions. That's completely cool, right? But in this type of a volatile market, if you don't buy the dips, right? So for example, I invested crazy ton of money here, right? I had invested a lot of money in the US markets. Again, there was a 20-21% dip on NASDAQ. So all these points you must remember, right? And accordingly design your portfolio. Next point, natural question comes that, hey, what about the fact that some stocks must be undervalued? Yes, one could argue that some stocks are undervalued. For example, let me show my analysis of LIC, right? So for example, if you study LIC, there was so much interest on LIC stock when it IPO'd. And at what price point did it IPO? Well, it IPO'd at somewhere around 850, 860 rupees. Okay. Now what has happened on LIC? Well, number one thing is that it danced around for close to how many years? For close to 3 years. And since then, it has given how much run up, right? From its IPOing price. Okay. So it has only given 11% run up. So this run up is not huge. Okay. What about the performance of the asset? So for example, we can just quickly check that how has LIC performed, right? In the last few years, right? So for example, you will see that here it IPO'd. Okay. Since then, has it been able to grow its revenues? Yes. Has it been able to grow its net profits? Okay, so take a look at net profits. Has it been able to grow its EPS? Yes, right? So all positive signs are there. The growth rate or the profit or revenue growth rate on something like LIC is very good. So from that lens, one could argue that, hey, this type of a stock is undervalued. So here it kind of makes sense to build positions. Now, what are some of the stocks where you could potentially book profits from? So for example, I have been a huge proponent of Indian banks, right? Indian private banks. Built huge positions on like finance stocks, Geo Finance, Bajaj Finance, banks, Axis Bank, ICICI, HDFC. So here, if you consider HDFC, okay, so HDFC, again, like, I mean, the story that I was telling you about Bajaj Finance, exactly that story plays out for HDFC also. For example, here again, the same thing, right? The company started consolidating from 2021, right? It consolidated for 4 years. People panicked, HDFC is a bekar bank, this, that stuff. Exactly the same pattern is playing out on Bajaj Finance. In fact, if I hide this name, right, and compare the HDFC chart with Bajaj Finance chart, you will not be able to separate the two, okay, in a way. So what I'm telling you, right, let's see here, it's hitting the resistance point, right? So technically it's a sell, right? So I am booking like maybe 15-20% profit, rotating it to undervalued or turnaround stocks. Last time I did an Indian video, I talked about IEX. Since then, it has gone up by 11-12%. So you can do similar analysis there, right? But long story short, some profit booking has to be done. Why? Because Nifty is dancing like this, okay? And Nifty will be managed, okay? Now, what is the meaning of Nifty being managed? For example, from time to time, for let's say a period of 2 years, right? HDFC Bank will be made to go sideways. It's not HDFC Bank's fault. It's just that how operators behave. Okay, that for 2 years they will just make it go sideways. Then there will be run up on like HDFC Bank and other stock, for example, another heavyweight, for example, Reliance will be made to go sideways. Then TCS will be made to go sideways, etc. So you have to think from this angle that, you know what, where the next round of rally might come, and on a long frame or short frame, is a particular stock undervalued or overvalued, right? So is HDFC Bank undervalued? Long frame, one could say that yes, there is still some rally left. Okay. On a short frame, is it overvalued? Yes. Okay. So it is, one could say that technically it is slightly overvalued. I hope that this point is clear. This might be a little bit confusing. So in case you guys are not able to grasp these concepts, let me know. I'll try to write a note or something. Okay. So I hope that this point is clear. Now, next point, people keep on asking me that, you know what, can you talk about like multi-baggers, right? Because that is what I'm interested in buying in this round of my portfolio redesign. See, there is no such thing as multi-bagger. It's not as if I can tell you that, hey, this stock is multi-bagger, go and buy it today, and after 10 years, you become like a Arabpati. No, it will not work that way, guys. What you need to do is that you need to figure out a story that no one is able to figure out in the market, right? Or people are generally not noticing it. So one of the bets that I'm keen on taking is PB Fintech, right? So for example, let me just quickly show you what's happening at PB Fintech. Okay. See, so this is the IPO, right? So it happened here, 21. And since then it has given how much? It has given 45% run up. So nothing crazy, right? For such a high risk company, 4 years, 40% is like 9-10% CAGR, hardly anything. And it has now started to run up. Okay. Now, fundamentally, what has happened with the stock? So let's just go and check, right? So PB Fintech, if you take a look, right? So sales have exploded. Yes. The company has become net profitable because one of the key issues at the time of PB Fintech or Policy Bazaar as we know it, right, was that it was a loss-making company. Now it has become a profit-making company. Its EPS has turned positive, net profitability has improved, it's running good initiatives. India's insurance market is under-penetrated. It's a profitable market. It's not as if that the insurance market in India will not grow. So on a long frame, this seems like a good bet. But what people are excited about right now in India? Well, okay, data centers, okay. We don't know. Okay, so what is data center stock? Now you have to really think that, okay, in order to run like a data center, what do you need? You require a lot of land. You require access to cheap electricity. You require access to computational power. You require regulations to be on your side. So these are 4 or 5 things, and security, right? So these 5-6 things are there. Now use your brain, think that which companies will be able to do it. Okay, so according to me, TCS and Reliance are probably, and even Adani's are like probably 2-3 bigger candidates who can do this. Now TCS, Reliance, Adani's do not have a subsidiary, right, which is a data center driven stock on this, right? But do you not think that Reliance will also do data center play? They will. Adani's, will they not do? TCS, will they not pivot their business to that? So while I have been bearish on IT stocks, I am adding a little bit of TCS. The reason is very simple, that because I feel that at a certain scale, right? I mean, after 2-3 years, 4 years, TCS will have some role to play in terms of shaping data center story in India. Even if Reliance ends up building the data center infrastructure, then TCS is likely to power it. Okay. So for example, in the US, we have a company called as Palantir that pretty much is powering up the AI revolution, right? So that's pretty much the glue that holds the entire AI together. Similarly, TCS might be the glue that would hold the data center story in India together. So let's look at what's happening at TCS, right? From a technicals point of view. So if we just quickly go and study TCS, right? So here you can see that honestly, like it's trading at its 4th, 5th support. Okay. So here, even if it turns around and reaches its highest ever levels, right? So there is a 30% margin at play, right? So this is good, right? Technically, it looks okay. Now, can it cause pain for you in the short term, right? Over the next, maybe like 1 year, 2 years, something like this, maybe, right? It might go something like this, right? And then it can give a breakout here. But this is the aggregation zone for the stock. If you're not aggregating it now, then forget about it. There is no point in aggregating, like, you know, once it starts to run up. Which brings us to the final point, right? That, okay, what about mid cap, small caps? Mid cap, small caps are great, right? As long as they are targeting a certain niche. And mid cap, small caps run really fast. That's a point. Okay. For example, Dreamfolks is a company that I picked. Unfortunately, it has not run. It has faced a lot of pressure. Now, whenever you are investing in small cap companies, invest like smaller amounts. You don't invest like amount like what you would be investing in TCS, right? But on the flip side, another small cap, mid cap company, SBI Cards, it has done like bumper returns, right? In the sense that, for example, I'll just quickly show you that how much SBI Cards has done. I retain all my positions, right? So in the last 6 months, it has given 41% run up. In the last 1 month, Dream Folks has given like 21% run up. Now, what is happening is that there will be turnaround. Turnaround on these type of small cap, mid cap companies is really, really fast. Let me show you one more example. So for example, Rushil Decor is like another stock that we had picked like long time back. Right? Now, what is happening here? So for example, if you take a look at last 1 month, it has given like 45% run up. So what is happening is that the turnaround on these stocks are really fast. You can't really judge like a small cap, mid cap stock with a Nifty 50. So what you should be doing is that you should divide your portfolio into two, right? One is that you figure out your core stable stocks. There you can again split it into two. One is that you buy companies which are high growth potential. For example, maybe Bajaj Finance or Jio. Okay, book some profits. This is not the time to enter it per se. Okay, and there then you have like slightly undervalued, fairly valued companies like TCS and all, right? So that's the core of your portfolio, or a 60-70% portfolio you want to build there. Then keep the second portfolio or second part of your portfolio separate, which is small mid cap stocks. For example, if you're adding SBI Cards, Rushil Decor, Green Panel Industries, Dream Folks, PVR, all these companies. Now, here you need to widen the portfolio, right? You cannot compare it to like your portfolio one, right? And accordingly then pick bets and hedge it out, right? So I mean, that's the most important part, that you need to have like a bouquet of portfolio, and accordingly you need to learn how to build positions. Final point that I'll tell you right on this entire story is very simple. For example, if you consider PB Fintech, right? Now the stock is just witnessing a turnaround. It has gone through that entire price discovery for so many years, right? So this is how it might go, right? Now here the growth potential is massive, right? But what is happening is that it is operating on a long frame, right? So for example, this aggregation took like how many years? Almost 3.54 years, okay, here gone, right? This has been happening for the last 1 year. Now, today you hear about PB Fintech from me. Tomorrow you buy the stock. Day after tomorrow you start abusing me by coming on this channel, right? That, okay, you asked us to buy like PB. I'm not asking you to do anything. Do whatever you like. Consult like your astrologers, consult like your advisors, whatever you need to do, you do it. I'm just helping you understand common sense. So in this, you must learn something about position sizing, right? Position sizing means that, see, how do you aggregate? For example, if you have to invest 100 units of money, will you go and buy everything tomorrow on this stock? Understand, right? That's the most important point. So do it in short bulks, right? Now I cannot tell you like, I mean, like this, that, okay, buy itna khareed lo and all that stuff. That is something of a brain that you have to apply and come out with your own strategies. So yeah, so that's it. I hope that you enjoyed this conversation. It was a very honest conversation. If you liked it, do press the like button, subscribe to the channel, and I'll see you soon.